Well, as we've been hearing, stock markets across Europe and Asia have fallen sharply following the announcement that Greek banks will remain closed all week. The value of the euro has also dropped. Let's get the very latest now from our business presenter, Susannah Streeter. What is happening on the markets, Susannah?
Well, at the moment, really when the Greeks woke up this morning to closed banks and closed ATM machines, on the financial markets, it was all sell, sell, sell. Initially, at least, if you can look on the screens now, as we can see here, the FTSE 100 has dropped quite a bit, down 1.7%, but greater falls we've seen. The DAX in Frankfurt, the CAC 40 in Paris. In fact, the DAX was down by way over 4% a little bit earlier, and it affected markets in Asia too. As you can see, the Nikkei there on the board in Japan also down by 3%. It's this kind of uncertainty, the fear of the unknown really, that's rattling investors. But it's also quite important to stress, though, that these aren't dramatic falls. There is still a chink of optimism around that a deal still could be done. You've had those remarks just there from Angela Merkel. We've had the French president speaking as well, how he wants to see some kind of deal. And that is being reflected in the markets. The FTSE 100, for example, hasn't gone back down to the previous low it registered earlier this year. So some kind of sense of a bit of a rally could be coming.
And what about the euro? What's happening with the euro?
Well, yes, of course, we did see a kind of downward trajectory path of the euro over recent months as this worry over Greece's debt crisis continued, and we had a pretty sharp fall, as you can see on the board here. This is the euro against the dollar, quite a dramatic fall when it became clear that there were going to be these capital controls imposed in Greece. That means that ordinary Greeks can't take out big wads of cash, only 60 euros per day, and the fact that that lifeline from the European Central Bank, that funding lifeline, was going to be withdrawn, has really rattled investors on the currency markets. It means that really there's a lack of confidence in the Eurozone as a whole.
I mean, obviously the focus is on Greece at the moment, but how vulnerable potentially are other countries?
Well, it's interesting actually, because that's kind of reflected within the bond markets, because we talk about that investor confidence of the Eurozone as a whole, and there's actually quite a bit of a north-south divide that's really emerging. You've got the southern European economies such as Spain, Portugal and Italy, where bond yields have risen. Now, that's the interest that investors get by buying government debt, and because those countries are seen as more riskier investments, and it's feared that perhaps contagion, the Greece's financial instability could spread to these other countries. They're seen as riskier investments. However, bond yields for countries like Finland, Austria, Germany and the UK have actually fallen because they're seen as a bit of a safer bet for the moment.
Thank you, Susannah. You can read more about the debt crisis, don't forget, on the website. Plenty